What is going on, everybody, and welcome to another technical analysis. And in this video, I'm going to provide you entries and exits for stocks that I'm looking at throughout the week. And if that sounds like something you're interested in, consider subscribing, as I do also provide a weekly analysis where I go over current events, upcoming events. So if that sounds like something you're interested in, you can check out that video as well. And you can also check me out on X at Hemu137, where I go over a daily pulse on the market, because the market is very dynamic and can change off of any current events. So with all that being said, let's go ahead and drop a like and let's get this video kicked off here. That's something we've been talking about since last week. I mean, we've really been struggling trying to break and hold above the 60-90. And what we are seeing is that ultimately things are getting weaker, and especially during a quarter. You're talking about Q4 of last year. That should have been the Christmas rally. So you should have had a lot of great earnings, and we're not really seeing that. We're also seeing weakness in the cloud space, which is not good considering that Mag 7 has essentially been holding us up. So the fact we keep rejecting the 6100, again, I think ultimately what's going to happen is we're going to continue to play this range between the 6100 and this roughly this 6K mark until we get NVIDIA earnings, which is still about another 2 weeks away. Once we get that earnings out, then ultimately I think the market can make up its decision and kind of determine which direction it wants to go from that point. So we will have to see what happens there. But nonetheless, I think that's currently where we're at. Again, with everything currently going on, I wouldn't be surprised if this gaps down even more. Ultimately, if we do break that, I do think we're going to head down to the 58. This is a real critical level. Obviously, you have some other some zones pretty close to this main support here that can kind of slow it down a little bit. But I think you ultimately end up down here around the 5400 if we start breaking this particular level here. So we have to this level at the 58.850 mark. So we'll see how that does play out. But that's kind of what we're looking at there. Again, there's a lot of chop because there's a lot of policies and the administration's making a lot of moves right now. So with that being said, you're going to get a lot of volatility, and something we talked about before he took office this term. We saw that in the first term. So Bitcoin is finally showing some weakness. Again, this is a normal, typical pullback, but the fact that it can also break this 110 mark is concerning. Again, you still got a floor here that's holding pretty well at the 90K mark. I still honestly believe it's going to break this, and we're going to kind of gap fill here down to roughly around that 73 mark. We'll get a nice bounce out of that. The question is that going to be a bounce back up to try to at least attempt to go to like a 120, or are we going to break here? Now, we do have really, really solid support here. Let me zoom this out on the weekly here. So we do have really, really solid support roughly around that 73 mark and roughly around that 55K mark. But I do, like I said, once I do believe we break this and we gap fill that, this is, again, first attempt is always going to be a very strong bounce. That's something you need to always understand. And then also, again, this is a heavy support level. So you not only will you get a major bounce that could potentially push us one last attempt to try to break this essentially 110 mark. If you can't do that, it could be we roll over and start going back into a bear market. Again, you have to understand that what is going on is you've already essentially traveled again 580% since the low that was December of, what was that, 22, December of 23. So about 2 years ago was the low, and since that point, again, you've made a massive run of 500 and almost 560%. So to think that it's just going to keep going up, I think without any kind of massive pullback. Again, you've had these major legs here too that really haven't had a massive pullback. And again, for a Bitcoin reserve, that's the only problem, is a lot of institutions are getting in. So with that also being said, that means they can heavily manipulate the price of it. So you may not see these wild moves anymore. You may not see a million Bitcoin and all these things that people are talking about. I understand the way Bitcoin works, but again, when it's regulated, again, this is why metals have been heavily manipulated to keep down the price. So could very much be the same with Bitcoin. So they own enough Bitcoin at this point. It was kind of the whole thing against why Bitcoin was created, but it is what it is. So we'll see, but that's what we're kind of looking at. So the ceiling again being around that 110 mark. And then that 90K mark, we're looking to see if that will break back down this week, especially with core CPI. If inflation is high, big tech and crypto is going to fall. So just keep that in mind. It could be a pretty brutal week if we do get some high inflation. So keep that in mind, especially because there was a lot of spending that was occurring right before inauguration. So Tesla here, it looks like we broke down below the wedge. We are at a solid support here at the 355. Break that. They're kind of a pretty big gap drop here. Kind of have a little bit of a speed bump catch here at the 333. But ultimately, your major support here is at the 320. So then you have the 200 that's sitting right here. So now that you've broken this, because you've broken the 50 and the 100 level here, or the 20 and the 50 day EMAs, at this point, you're not going to fall much further. If it starts flirting with the 200 line, that means it's going to go even lower. But anytime you break and have some sort of pretty decent move below that 50 is a good time to start DCAing. And again, this is a good level to start buying. And then these levels down here, again, I still think this is going to, once humanoids catch on, which I think is going to be later on this year, you're going to have that like NVIDIA type momentum going for humanoids. And I think that could really ramp this thing up to some higher numbers that we haven't seen in a while. But again, there's nothing guaranteed. So just keep that in mind. So you do have to manage risk with that. But ultimately, I do still really like Tesla and RXRX are still my two favorites going into this year, especially the back half of this year. Again, you have to understand this front half is kind of offloading. Like I've always talked about, we're getting to that point to where everything gets offloaded. And then everybody kind of just piles in, and then they kind of ride it all the way to the back half of the year. So we're kind of looking to see that play move out just the same. So and then RXRX, it's still playing this range. I got some good news and did pop back up to 8. So we'll see if this thing can sell back down to the 6s. I would love to get this back at 6. I do hold a core position from 6, which I'm going to continue to hold for a couple of years. But ultimately, again, I've been trading this in and out on another position from 6 to 8. So every time this goes down to 6, buy and then sell. It's at 8 and just keep playing that. I'm hoping this does come back down, revisit the 6 again. 620 mark would be great. But there is definitely a wall here at that 812 mark. So we'll watch and see this week, looking to hopefully start selling off. Again, if it's a red core inflation report, I think this thing can easily gap down back down to 6, along with all the big techs. We'd have to watch that there as well. Apple. Now, this is one I want to watch. I might take a position in this for a longer swing as well. Again, they still call it the golden apple. It still has tons of money, enough to save itself, which it's been doing, till it gets to the point to where it can start becoming, come out with new products or something that catches on quickly. So we'll watch and we'll see this. But ultimately, right now, it's still kind of holding this 220 mark. Would really like it anything below the 200. But obviously we have some speed bumps, and again, given if you get bad core inflation, we could easily break this and then start testing these other levels. This is more of a speed bump than anything else. Your bigger support is down here just below the 200. So I do want to watch that coming in this week. Again, it did have a really good bounce off this 220, but again, with tariffs and everything, it does play into Apple a lot more than some of these other companies. But we will have to wait and see. But again, core inflation could be a big worry here coming into this week with Apple. But I do want to keep Apple on the list, at least for the short term. A lot of the other Mag 7s that I really do like your Amazon and Shopify. Again, they're too overextended and haven't pulled back far enough, in my opinion, to even bring them up. So this is why I don't talk about them. Also, SoFi. I'm kind of watching this one, determining if I want to take this position here, which you have pretty good support here, roughly around the $14 mark. We have attempted once to hit it and we've bounced out of it. The question is, are we going to be able to do that again? Because if it does break this, you can get a pretty big drop down at 12. Maybe better just to wait to 12 for this one, but I still really like SoFi just going into the future as well. But As of right now, that's what we're kind of seeing. So could be good for short-term play, and then ride this back up at least to the 15, 13, maybe even up here to the 17, 18 mark. So kind of really I like SoFi as a potential play there. It's a little bit higher risk because again, it's already been running. So just keep that in mind moving forward. Elf, I really like where Elf is at now. The company is phenomenal and they're expanding. Yes, tariffs will play some, but it's only going to add like $1 or $2 additional to the project. This is at the 200 EMA, and it bounced pretty decently out of here as soon as it hit this just under $60 mark. So this, I'm going to more than likely get a position in this week because I do really like for this recovering, because I do believe once the market turns around, you have to understand the positions I give or longer term swings, just depending. I don't give the exact time frame because I don't know when exactly that's going to happen. Sometimes it's a lot quicker than others. But if you buy in at a floor price like this and this thing gaps up, like because you're talking about potentially about a 200% move from here back to 220, and yes, I do believe it can easily get back up to 220. Again, it's one of the hottest makeups in the business right now, and continue to expand. Especially given the all the craziness that's been going on over the past couple of years, it's had absolutely amazing growth. So again, I really like where it's at right now. So looking to grab a bag of this going in the next couple months and see how this does recur. Again, I think we will correct at some point this year. I think there will be some manufactured event that occurs, so it could potentially sell off a little bit more. Do I see it dropping all the way down to 30? I don't know. Again, this is not financial advice, obviously, but with that being said, again, we will see. It's a great company and doing great things. So again, the market needs to turn for things to get better in general anyway. But again, I do really like Elf as well as potential another play there. Meta is too high. Microsoft is too high. Nvidia is too high, despite what's going on. Actually, let's take a look at Nvidia. I haven't taken a look at Nvidia in a while. Yeah, it's still very too high. For me to want to get an Nvidia, this thing would still have to come down to around the $100 mark. But again, the possibility of that is probably slim to none that's going to happen. It did gap fill. Still see if it can break this. It might actually get rejected off this 129. Again, ultimately, we're still waiting for earnings for this thing. When we do get earnings, which I think is actually next week, so it's not this week, but next, then that will dictate where the market will go from there. So we do need to be paying attention to this one, because if it does start selling off or inflation is bad, it could be very much of a concern moving forward, especially because all the data that's coming out is reflecting that everything we've been talking about for over the last year has been true and not a conspiracy theory. So but with that being said, let's take a look at what else we got here. There's a couple other ones I think I wanted to look at here. We obviously want to look at the same ones we typically always do. Let's take a look at BA. BA again had that nice wedge break. Did kind of retest here about the 67. It looks like it's attempting to run now. Could potentially try to get in here at the 179 with the anticipation that this could drop back down to 166. Ultimately, I do believe this thing can recover 75% of this move. So I do believe we can at least see 220 at some point. It's gaining momentum is what it looks like. So it could recover fairly quickly. But watching this one as well moving forward. There's another one too. I've been bringing this one up on Twitter a lot. If I can see it here. It's probably just easier for me to type it in. But it is Wing. Wing I've been talking about for a while. I've entered a position in this a while back when we actually hit here. And then it actually pulled back one last time at the 272, but now it's starting to break out. Could potentially, if it dips one last time down here to the 290, might be your last entry, and then this thing might start slowly riding up. Again, this is a very much a slow burner. You have to understand this. These are days. And once inflation starts to rise, is kind of what has driven this thing. And I expect inflation to kind of pick up a little bit. It really depends, even with all the cutting that's going on, how quick inflation will come back. So again, when you start cutting, it just exposes the fact that there wasn't a lot of high inflation. It was essentially manufactured, which is very much a possibility because we were wasting billions of dollars But being said, we'll see what happens here. I do like this position moving forward as well. So that's something to keep on the radar there. And then we do also have JP Morgan. Where did JP Morgan go? I just saw JP Morgan on here. There it is, JP Morgan. Obviously, still price discovery mode at this point. Well, we'll see what happens, but ultimately, we'll see. We want this thing to correct. It's been at a. Let's go at a higher time frame because I mean this is just absurd. We paused right here, and this thing has just gone up. Hardly any red candles in this thing. That is not a structure. That is heavily manipulated market. Again, we've been crashing up for a while, so just understand that the market in general, it's designed to go up over the past 2 decades at this point since the dot-com boom. There's been a lot of manipulation that's gone on, I think, to help drive price and drive the markets to where they're currently at. So, but with that being said, nonetheless, we don't care about all those details. What we care about is trying to make money off of what's going on. So ultimately, right now, again, still too very overextended. Again, I think you're going to get bank runs and fear in the market before this thing really retracts any. And again, you could be seeing that because the Bank Term Funding Program is essentially out of money almost at this point. So you probably got about another maybe month before things start really getting bad. So really kind of watching that moving forward as well. But as of right now, I do believe that is pretty much... Win obviously is another honorable mention. It's still playing this wedge here. I've talked about this wedge. It could potentially drop all the way back down to the 67. I think a very strong potential stock moving forward. But again, this is very choppy and takes a long time. But I think once we do, I think the market was going to churn eventually in these next couple of months because I think we'll have a major selling event. And then this thing will pop out of here and potentially run back up. So there's no guarantee of that. But Win's always done very good, especially during the pandemic. I think it really proved that. So just keep that in mind. So even though it sold off during the pandemic, it still did fairly well. Yeah, it pulled back a little bit here, but it's been kind of just in a very consolidative manner here. I'm looking for this thing to really blow out on top of this thing here coming in the next year or two. So some of these positions are roughly around a year. Just whatever. It's just what you're patient with. If you're here to day trade, I don't share day trades on here typically. I typically will just do that without actually sharing those type of trades. But these are more swing trades. I think they're much more accurate and they're a lot more beneficial to a lot of people. Again, your trading strategy should match your personality. Most people don't have patience, so you shouldn't really be probably trading certain things or playing zero DTEs every day either. So really just depends. Most people aren't that way. So you don't really want to look at it too much, but no, you still have a solid sound position and your risk is minimal. And that's what we look for here. So with all that being said, again, if you've made it this far, go ahead and drop a like, drop a ticker down in the comments below on what you're looking at this week. And then I will talk to you guys later.